What is up, team? We are so back. We are going to chat about in today's episode just a summary of what took place in the market last week. It was crazy. It was volatile. We're also going to cover a highly undervalued stock. Now, I'm not a financial advisor. This is not financial advice, and results may vary, but there's a stock primed and sitting that I've been accumulating at mass, and I believe that it is so undervalued right now that in this downturn in the market, which is quite natural and healthy, there is a lot of opportunity sitting there for us to capture. So we're going to get right into it here. This is Blomonomics. It's a no fluff, no BS, no hype trading channel where we just talk about where the opportunity is in the market and where we can be parking our money to potentially see some gains. Now, the last 4 weeks we've seen a downturn in the S&P 500. The NASDAQ looks very similar. There was this candle 3 weeks ago, right here, this big red candle that we said if we were going to break above it, we'd probably see a rally. If we broke below it, we'd probably see a bit of a downturn. Now, 2 weeks ago, we traded right in the middle of it. We just kind of chopped in the middle of that giant red candle. This week, we definitively broke below it. So what happened? NVIDIA announced their earnings. We had the non-farm payroll report come out with the CPI report, a bunch of news. Long story short, NVIDIA earnings were insane. It propped the market for about 5 hours, and then the market ended up continuing to sell off. This is a very healthy sell-off. As you can see here, we've been in a massive bull trend since essentially April, just up and up and up and up and up with very few red weeks. This is just getting a lot of froth out of the market. A lot of the people who are betting on margin, just a healthy sell-off, a lot of people taking profits before the end of the year. You're going to have a lot of tax loss harvesting before the end of the year. This is totally normal. I would not be panicking. And what you can see that happened is we hit the 20-day moving average and immediately bounced off it. There's a lot of buy orders there. That is a very big resistance zone. Not to say we're going to stay above it. We could actually see ourselves come down even further and come down to this 50-day moving average. But in this is going to come a lot of opportunity. So no way to tell what way the market's going to go. But the cheaper the market gets, the cheaper stocks and good buying positions get as well. We've all lost money. If you've been invested or a long-term investor in the last 4 weeks, it was pretty hard not to. The indexes are down. Most individual stocks are down. There's a couple outliers in there, but we've all probably seen quite a bit of red in our portfolio. And that's okay, because all we have to do is pay attention and figure out how we're going to ride this wave back up and how we're going to capture the most profits. So let's get right into it today. The stock I want to talk about is PayPal. So just for some context here and a bit of the lay of the land, PayPal was up 4% today. It was down 3% on the last week. In the last months, down 11%, down 15%. Year to date, down 30%. In the last 5 years, down 68%. This stock has been severely beaten up. Now you can see for the last while, it's been trading pretty flat here and just kind of found a bit of a base. But let's chat about the actual financials. So there's two big things happening with PayPal right now. One of them is the financials are actually incredibly impressive, and we're going to go over the financials. The second one is the PayPal OpenAI partnership. This just got announced. PayPal OpenAI partnership. So in their last earnings, they announced that they're going to be integrating with ChatGPT, and effectively that you'll be able to shop through ChatGPT, and the payment system that's going to be the foundation of that is going to be PayPal. So you can do AI or agentic AI shopping. This should be launched in 2026. And they're basically the official platform of OpenAI and ChatGPT, which is huge. That's going to be massive. Now, PayPal's not been the sexiest stock for the last number of years, but they're leaning heavily into AI, partnerships with AI companies. We could likely see come out of this partnerships with crypto companies. So they're not just letting themselves be like a legacy dinosaur. They're actually making the steps to sort of be on the cutting edge of tech as far as payment systems can be. So that's huge news. But what's even bigger news is the financials here, and I'm going to go over them with you. I'm going to simplify it so that you as an investor can understand exactly what's going on. It is not near as complex as you think it is, and this is, you can take a look into how I view whether a stock is undervalued or not. So there's 4 key things that we want to look at. And I'm just on Google Sheets, by the way. This is free for everyone. You can go look at the income statements, balance sheets, and the cash flow on Google Finance for any or most of your stocks. So you can be doing this exercise on a lot of stocks. The first thing that we need to look at is the company still growing? PayPal is up about 7% year over year on revenue in the last quarter. So that is steady growth. That is healthy growth. That is not explosive growth, but absolutely moving in the right direction. Anything above 5% is considered good. Is the company still profitable? Net income is your profit right here. So the profit jumped 23%. That means, yes, they are still profitable. It's a sign of better management. It's a sign of better cost control. It's a sign of stronger operations. So you love to see this number, and this number is even outpacing the revenue growth. So they're not only growing in revenue, they're becoming more efficient as a company. Third thing, is the company bringing in real cash? You go all the way down to the cash flow for this chart. There's two numbers you can look at. One of them is cash from operations. That's how much they got paid in that quarter from their customers, or the margins they took on all the payments they made or transacted. So they made almost $2 billion in cash. How much did they actually keep and put in their pocket as profit? $1.53 billion. That is up 333%, 335% on the year. That is massive. That is free cash flow. This is the golden metric you want to be looking at as an investor. At the end of the day, when all expenses are paid, taxes, all the accounting loopholes are done, how much cash is sitting in the account? So this is a massive jump. It basically is signaling that PayPal is very quietly undervalued right now. Another one is is the balance sheet safe? So in a bit of a downturn, can they afford to pay their bills? And I know you're going to see negative 9.77% here. So their cash went down. Their total cash, which is 10 billion, almost 11 billion in cash, went down year over year this quarter. But their total liabilities also went down. That means they're paying their debts with their cash. That is healthy. They have more assets than they have liabilities, and they have 10 billion of cash sitting on the sidelines that they're using to pay their bills and grow the business. So also very healthy. I know these numbers look negative, but just means that they're paying off debt, which is a great thing. The last thing you want to look at is this number called the price to book ratio, the PB ratio. This is basically, is the stock cheap relative to the value of the company? Most tech stocks trade at anywhere from about 3 to 20, 20 being quite expensive. Nvidia's at a 44, Palantir's at like a 60. Those are, you're paying so much for the stock for revenue that isn't even there yet, just assuming that the company is going to grow into that revenue somewhere in the future. Under 3 for a tech stock is considered cheap. So this stock now, in the terms of tech stocks, is considered a cheap stock. So, in summary, what we can see from the last earnings, is the revenue growing? Yes. Are profits growing? Yes, and they're actually outpacing revenue. Is the free cash flow growing? Yes, they're putting a ton more cash into the bank. On the balance sheet, is it healthy? Cash went down a little bit, but they're also paying down their debt. That is a sign of a healthy company. Lastly, the stock is considered cheap comparatively, relative to its value right now. So there's every single thing right here is a check mark that this company is doing well and that it's undervalued. So let's take a look at the price action, what happened over the last couple weeks. We're going to go to the daily chart on PayPal. I've been heavily accumulating the stock in this consolidation right here. And a consolidation is when the stock's just going up and down, up and down, up and down. There's no major price action. There's no major movement. It's almost winding up like a spring, and it's going to shoot one direction or the other. I had a hunch that PayPal was just going to look into some of these partnerships with crypto companies, a way to revitalize the company. And they did make this announcement with OpenAI just a few weeks ago. So what you saw here was the stock spike up. It went from about, lows of 65, highs of 70. It spiked up to about 77, immediately dropped back down, spiked up again, and then this is where it got hit with the last 4 weeks. of the bad market. So the stock wants to pump. You have a major resistance line right here. So this line, this blue line, a lot of people who bought up at this top are going to want to sell their stock and just get out of it and break even. So you're going to see a big sell pressure, but when it breaks through this resistance line at 80, who knows what the next price is going to be. It's been beaten up by the market, not by, you know, it being a bad company, but just by the overarching momentum of the market that's been down, down, down for the last month. It's been quite beat up. And so now I believe it's primed to spike back up. Now, the one unknown that we don't know is how much further the market could go down. It could turn around tomorrow and spike up 10%, or this could continue going down with the market. Now, we do have a big resistance line. We're going to go to the weekly chart here. If you look how low it's actually sitting, you're buying it at 2017 levels right now. I have the free version on this account for you all to show that we can do this for free. So that's why you keep seeing the ads pop up. But you're buying this at 2017 levels right now. The stock at its max price was in, a couple $100 up to over $300. Right now we're sitting at 60. My average buy price is $68, and I'm going to keep continuing to dollar cost average in. I bought more today. If it goes down, I'm going to buy more when it goes down, and if it goes down further than that, I'm just going to continue to accumulate the stock. I think when the OpenAI partnership comes to fruition and it's actually being used widely inside ChatGPT, it's going to be pretty exciting for investors who've seen a pretty stale company for a while. That backed by really, really strong and stable financials, I think that this stock is just primed for growth, and I think that the market has misvalued this and undervalued this stock. Another thing to look at is this giant purple line right here is the 200-day moving average. It is like a magnet. It always pulls stock towards it. And what you've seen is that, at the beginning of the year in January, we went up and hit that 200-day moving average and got rejected at it. It bounced off. And so now remember that moving average is acting like a magnet. The stock wants to pull back up at some point and retest that line. Assuming that maybe there's a bit of a downward trend here for the next couple weeks, who knows? We could see this average come to $80. From where we're at, if we were to bounce back off that line at $80, that's a 32% gain in the stock from where we're at the price today. So again, not a financial advisor, not financial advice. Results may vary for everyone. I've been accumulating the stock at $68 average. I'm going to continue to buy into this in my long-term portfolio. I think there's a position for a short-term swing trade here. The caution would be that the market's a little neutral and it could continue down. You might have to just bear a bit of that brunt. But in the medium to long term, I think that this stock is just positioned insanely for growth. So that is the stock pick of the week. Last thing I got to say here is we have a silver contest going on right now. I posted a video Sunday and Monday of this last week. Every comment on those two videos gets you one draw into the silver ounce giveaway tomorrow. I posted a video on Wednesday. Every comment counts as 2 entries, and then today's video counts as 2 entries as well. So you could have a total of 6 entries to win 1 ounce of silver. I will mail it to you in North America. If you live elsewhere, I can always just transfer you some crypto or something like that equal to the value. Appreciate all of you for liking and subscribing. There's been a lot of bots commenting on my videos too because of the giveaway title I had a few days ago. So all of those bots are going to be excluded from the contest, which means there's actually not a ton of you who are entered right now. So you have really good odds to win. So make sure you're liking and commenting if you are legitimately a real person. And we're going to do that draw tomorrow. I'll publish that video on Sunday and announce who the winner is, and then shoot you a DM and then send you that silver. So thanks so much for following along here. We'll talk soon. Cheers, team.